Rick Santelli is standing by patiently at the CME in Chicago with some breaking economic data. What do you got, Rick?
Good morning, Joe. Yes, we're expecting around 330,000 on initial claims. That would take it below that 351,000. Still wouldn't change. 312,000 is the current low, but it went the other way. 362,000, so that's up 11,000. But I'm sure the revisions will trickle in for last week. And if you look at continuing claims, moved a bit higher as well, 2.802 million, so 2,802,000. The low water mark there, which is the good way to proceed, is 2,715,000 from the first week of the month. So we see that. Now, let's look at what's going on with our last trip around the block on second quarter GDP. It actually gets upgraded from 6.6 to 6.7. The consumption numbers, wow, up to 12%, so they even moved higher. What stayed the same was the price index. The price index is up 6.1%. That remains at a 40-year high going back to 1981. And the core PCE, quarter over quarter, also remains at up 6.1. Don't get too nervous, though. That's not a 40-year high. That's a 38-year high going back to 1983. And if we look at the following, and I think this is really important, quickly, a 2-year note up 4 basis points on the quarter, a 5-year note up 12 basis points on the quarter, a 10-year note up 6 basis points on the quarter. Here's a good one. 30-year bonds unchanged on the quarter at 208. The dollar index up over 2% on the quarter. Bond yields virtually unchanged, but this makes sense. We've all been saying that. Bond yields and 10-year note yields anywhere from a 3-month to 3.5-month highs, so it dovetails right back. And I guess the point there is, everything I read today, Joe, bonds, this is just a technical move, nothing fundamental. Yeah, give me a break. Rates are too low, inflation is too high, and policies are too stimulative. A, B, C. What does that equal? That equals a real move. That's what it equals. Back